charts, this is still a busy week, even with the FANGs being done and a few of the FANG men's as well. But we're done with those now, and it's time to look at some of the old economy stocks. Yes, they're back in favor again. You know what I'm talking about, some of the industrials, the chemicals, the just older names that maybe you haven't looked at for quite some time, but maybe you should be. What are 5 of the stocks you should be taking a look at? I brought them for you on this very busy week, so let's dive right in. I'm going to start with Mondelez. I don't think I've ever covered them on the Earnings All-Stars charts before, but maybe I should have because they only have that one miss in the last 5 years. So they've got this great earnings surprise track record. Year to date, these shares are down, but only 7%. So they are outperforming the rest of the market, and that's what we want to see. But these shares aren't cheap. Everybody's been kind of piling in the last couple of weeks into these food type of companies, and so they're trading at about 21 times. You do get a dividend yielding 2.5%. Dividends are pretty common with the old industrial type stocks, or the old economy, I should say. And Mondelez is one of those. Even though it was broken off of Kraft, it's been around a long, long time. So this is one a lot of people on the food side are going to be watching, and I will be too. Then we're going to switch it over to Cummins. It is definitely on the older economy side. They do powertrains. And you can see kind of an interesting chart here. They have missed twice there during the pandemic, but otherwise that's a very good track record and have met or beat 2 quarters in a row now. So they look to be back on track. They're actually pretty cheap with a forward P of just 14. And we're seeing that like mini rally right there. Year to date, these shares are now up 11%, so that is outperforming. They're not yet back to those 2021 highs, but could stock like this get there at just 14 times? Maybe. And dividend, it does pay one, yielding 2.6% for Cummins. Then we're going to switch over to the chemical side, or commodities, I should say. Albemarle, ALB is their ticker. They're big on lithium. That's what's driving this stock higher. The lithium prices have tripled because that's what's used in electric vehicle batteries. And Albemarle, one of the big producers of lithium. So, but even before those prices, tripled, they've got this great earnings streak, just that one miss in 2020. So they've beaten 10 times in a row. That's fantastic, especially during a pandemic. Year to date, these shares are now up about 20%. Not quite at that 5-year high again, but it was earlier. So can it get there and break out again? PE is just 13 times because those earnings estimates have been increased twice already this year due to the higher lithium prices. Will they make it 3 times? I don't know. That's a lot to ask, but still cheap here. They actually do also pay a dividend, yielding just 0.6%, however. So it is a small dividend. But Albemarle, an interesting, old economy take on the new economy on the electric vehicle side. Then we're going to go real old economy with the Masaryk company, ticker MAC. This is a mall REIT. So they're in about 44 markets nationwide, the big metro areas. So if you're going to one of those kind of deluxe malls that have both entertainment, it might have the nice food court, the movie theater, things to do at the mall, that's probably a Masaryk mall. And as you can see, it got hammered when the pandemic started. So no surprise, a bunch of misses there. But they've turned it around the last 5 quarters, 5 beats in a row. But these shares peaked out in 2021 on the hopes of the reopen, that things would get back to kind of normal for the malls and, just society in general after the COVID shutdowns. But these shares have sold off here in 2022, along with everything else. Year to date, they're down 36%, so it's not outperforming, obviously. They are off those lows you can see kind of there in September. That's when it hit this kind of new post-COVID lows. but still pretty, dramatic decline here. PE is dirt cheap at 5.7 times. They have resumed their dividend. And now Zacks is saying it was 5.5%, but I see they just announced ahead of their earnings that they're raising their dividend by 13% here. So the yield looks like it's going to be about 6.2% here. So something must be going on that they feel confident enough to raise that dividend. Always something to look for in REITs. And this is one I'm going to be watching to see what's going on with, their earnings. And maybe things aren't as bad as what it appears to be here. Then we're going to look at one of the big winners for this year, Hershey's, ticker HSY. I'm going to call this the old economy because they've been around, at least 100 years now. And we just can't get enough of the Hershey's chocolate bar and their various other chocolates and creations. And everybody's been diving into, as I said, these food type of stocks. They have beat 9 quarters in a row now. That's very impressive during a pandemic sweeping the globe here. And so they've got the good streak. It is up 24%, however, year to date, because everybody's piling in. You can see it hitting those 5-year highs, up 130% over those 5 years. S&P 500 up just 51%, so almost triple the S&P 500. PE is a bit stretched here now at 29 times. That's almost tech level of PE level there, and does pay a dividend yielding 1.7%. But is Hershey simply too hot to handle here, or can they meet or beat again and still put out the good guidance? We will see. So you can kind of see a changing of the guard this week as we do get a lot of these old economy stocks that people have just been ignoring for several years because they've been focused on the tech. But we will get some tech this week too. So you're going to want to be tuning in to get all of the earnings all-stars. I'm still going to be doing them for the next couple of weeks, even though we're done with the fangs, and there's a lot going on. So you want to be sure to subscribe at zacks.com/YouTube. Get my Twitter feed because I'm bringing you all these charts throughout all of the earnings season, and just generally tune in to our earnings site. You can go onto Zacks, click on the earnings link, and get all of our great content on this earnings season, which is an important one for this year and heading into 2023. So be sure to subscribe, and I'll see you again next time with some more earnings charts.